What is going on, everybody? This is Andrew from DeFiancy. All right, guys, this is a Sunday special, and we're going to start doing these from now on. And effectively, what we want to accomplish with these Sunday videos is really just giving people a primer on what is coming the next week. Really a summary of what to expect, where our head's at. And I think the best place to start is the economic calendar, right? What economic events, data might be coming out, to really keep an eye on, right? Because a lot of the trading opportunities throughout the week are because of events, right? And last week, a great example was the CPI. We had a huge move following the CPI print. And this week is like the opposite. So we had a lot of things going on last week. This week, not so much, but it is an interesting week because it is a short week, meaning there will not be trading within the legacy markets on Thursday or Friday because you have Thanksgiving. And I don't believe you have trading on Friday. Maybe I'm wrong on that one, but I don't think I don't think you have a cash session on Friday. But there is some data on Friday that may be important, and also on Wednesday. But outside of that, I'm not really expecting this to really move the market or change the direction of the market right now. Yes, you do have FOMC minutes, and it's highlighted in red. But to be honest, the minutes are usually not really important because they just say the same thing that they said at the FOMC meeting. Now, a little asterisk there because you might see them come out and maybe change a little bit of their words, potentially because they're seeing risk assets flying through the roof. They don't like that. They actually don't really want markets to go wild because of their own words, and they know that the market, in some part, has been reacting to the last FOMC, their forward guidance, and they might come out and kind of try to track it back. I just don't believe it's even going to work if they do it. They would really have to say some crazy stuff, I think, to really scare this market. Because, again, we talked about this in previous videos. The jig is up. We know, really, the Fed doesn't have a lot of wiggle room here to be raising rates. It's quite obvious that they're really not in the position to be this Paul Volcker, to have this Paul Volcker stance. It's just not based in practical reality. Right? And the market has been sniffing this out for quite some time, in my opinion. Now, again, do keep in mind we do have U.S. unemployment claims on Wednesday. I do believe that could be, it could change the market quite substantially if it's really hot or cold. And then you also have U.S. flash manufacturing, U.S. flash services PMI on Friday. But again, I don't believe that the markets are even open on Friday. I could be wrong on that. But we do have a Bitcoin futures expiration to keep an eye on. And crypto markets are going to be open no matter what. They're always open. So next week will be, potentially just as busy for crypto. But I'll give you reasons why I think next week might not be all that volatile for crypto. So enough of, I'm giving you a primer on what to look forward to here. Let's jump into the good stuff, right? Let's jump into the good stuff. What do we got going on next week in terms of our levels for charts? And look, we're about to just do this straight up, just on the fly here. Okay, I'm gonna just show you this on the fly. I haven't even created these levels. You're coming through this process with me live. Okay, so let's take a look at Bitcoin here. What I like to do is just zoom out a little bit on Bitcoin when I get a weekly plan here. On the weekly, go to the weekly chart. We're gonna take off our levels here. And then we're just going to look at this objectively. What does this look like? What is the chart telling us, right? And you have a weekly close here in about 8 hours, 8.5 hours roughly. And I think what this chart is telling me is that we are now entering the chop phase that usually follows an expansion move. Okay, what do I mean by that? So we had an expansion move here back in January, chop. Expansion move back in March, chop. Expansion move in June, chop. Expansion move to the downside, and then chop. And now we've had this really rather, remarkable expansion move. It actually took less or more time than the previous expansion moves by a few weeks, but now we might be entering this chop zone, guys, the chop zone. And a lot of people on Twitter have been talking about this. It does seem fairly obvious. Now, what does that mean? Well, it means we might have a few consecutive, what I call, or what other people call also, inside weeks, meaning price just kind of trades within a defined range. Now, it's important to understand that because a lot of people, they want to be positioned for blast off, for expansion. But the reality is that actually isn't very likely. If you look, like I say, in the past this year, that's only happened a few times. Most of the price action is actually very choppy. So, look, let's not make it complicated. Let's just assume that Bitcoin's just going to behave like Bitcoin has. I think that's common sense. Does that mean it will? Of course not, guys. But it's just rational, and I would say just your best, your best bet is just to assume that that's the case, right? So we're just going to assume that. Again, don't be surprised if it doesn't, but I think probably, in my mind, 70% chance it's going to be choppy. So what does that mean? What do I mean by inside week? Well, what do I mean by that is I think you're just going to chop around on what I'm going to call, and what is, the value area high of this range and then the value area low of this range. So how do we find those levels? Now you can use some sophisticated tooling that I use, like exocharts, that will find these levels for you. But I do want to show people how those levels are actually constructed by the computers. We can find them ourselves by using a volume profile. Okay, so we're going to zoom in just to this level, or just to this range here. Get rid of some stuff. We're actually going to zoom in a little bit closer, say the 4 hour. Okay, so when we do that, what we see is we have a volume profile, and to me this is one of the most important data sets that you can look at to really show you what is going on, right? Because volume is ultimately, in many cases more important than the I don't want to say the price, but let's just say this. A lot of people look at price over time, not realizing that volume is just as important as price and time, because it shows you where the large traders are, right? And where traders have placed large trades, they are likely to do so again. Okay, so for example, notice how whenever we had this big pullback here, bam, huge, relatively big move, bounced right off of this volume node. That's what we call this, a volume node. So if you look at this, the length going to the left indicates how much volume, so how many trades has occurred at that location. And by looking at this right now, this is actually kind of an ugly, I would say kind of an ugly profile. You typically want it to be a little bit more uniform. But what this tells me is we're probably going to fill out this area. And I think eventually, and I could be wrong on this, guys, like this is just telling you from my experience, we're going to eventually create more of a balanced structure. Oops. That's probably going to look like this. So what I'm saying is this area here is probably going to get filled out. And then eventually I think you're going to have more of a balanced structure. Okay. So how do we actually trade this? Well, I actually do think that Bitcoin is a lot more tradable now than it had been earlier. Don't get me wrong, we're about to get choppy. But you can trade this chop if you know what you're doing. Okay, some people prefer to trade crypto over legacy assets because of its decentralization and its ease of getting capital into these trading platforms. So I get it. If you want to day trade Bitcoin, you can, but you do need to understand you have to be a little bit more patient because your trading opportunities might be less than, let's say, the S&P 500 or the NASDAQ. Well, let's cover Bitcoin first. We are going to just say, hey, we're going to look at this volume node, and notice how it kind of drops off here after this point. We're going to say this area here is what we're going to call our value area high of our defined range so far. Okay, you really have two ranges here. You have like a range here and a range here, but we're going to treat it as one because I think eventually over the week it's going to get filled out in the middle here, so we're just going to treat this as if we're going to trade between these 2 points. Okay, but this is our value area high. What does that mean? That means that if price gets into this area, and I need to probably change our colors here. Okay, if price enters around this level, you likely will have sellers come in. Okay, and vice versa. If you have price come into this area, you are likely to have buyers. Now, because we haven't really tested this level here, I would expect that if price got here, it might get pretty flushy. Like you might have some kind of action like this. This is actually what I would expect. If price were to come here, it would probably be like, boom, and come right back up. I mean, you'd get a flush. I don't know if it'd be that much. That's pretty dramatic. But I think you get what I'm saying. Because you haven't had a lot of activity here, there's a lot of positions that has been building up that could get flushed out as we approach this level. Okay, so I'm interested in a long here and shorts here. It's pretty much that simple. What I don't want to do is get caught in the middle of this. I don't want to get caught in the middle of this. Now again, like I said, this is actually really two ranges because you have this volume node here and this volume node here. But for most people, they should probably just treat this as one range. Okay, I think it's going to be easier. Now, if you're a professional scalper, you're probably going to be scalping on both of these nodes. Now, but I don't recommend that really for Bitcoin, to be honest. I think if you're going to scalp like that, you should probably be scalping, or if you're going to be making that many trades, what I would call ultra low time frame scalps, I would probably, I would recommend that people do that on the ES or the NASDAQ or some other index in the legacy market. But kind of getting away from our topic here. So let's look at this in terms of how else should we look at this? So this is our value area high, as we say, and what we're going to do is, because I want people to understand really the methodology, okay, here. What the heck? Bear with me, guys. Value area high. Okay. We're going to remove this line now. This is our value area low. Now again, this one hasn't really been tested yet, but I'm going to go out on a limb and say, you know what, this probably will be tested. Value area low. And then this area here, in the middle of this, stay away. Stay away. Oops. Okay. Okay. All right, you get it? You get it? So I'm just going to put a line underneath there. Anywhere in here, this is your midpoint, at least it will be at some point. This will eventually be your POC, in my opinion, of this range. We're just in the early process of kind of creating this market structure, or this profile here, okay? So, recap, okay? This is where you look too short. This is where you look too long. And that's that really is that simple. If price is in between here, you kind of want to just stay away. And I would recommend for people that are using leverage that, hey, if you short up here and then price comes somewhere to this middle line, it might be best to take some sort of profit because you're not guaranteed to make it to the value area low. And then also, vice versa, let's say you get to this area and again, you want to be careful when it gets here because it's probably going to flush a little bit longer. But let's say it flushes and it comes back to this area and we take a long because we like to wait for confirmation before getting long or short. Let's say that, if it were to bounce and make it up to this midpoint here, this is where we basically say, okay, we at least take half profit or total profit, depending on how conservative you want to be. Why do I say that? Because it's not guaranteed to make it to the other side of the range, right? So this is going to be a sticky area eventually, I believe. Now, let's see here. How else do we want to look at this? Okay, so that's pretty much how I look at Bitcoin. We're just going to leave it at that. That's the plan for this week. Shorts, longs, stay away, right? Now let's take a look at something else. Let's take a look at something like Near, which, by the way, we are still long Near. It's the only asset, the only altcoin asset that I have open in terms of like short-term swings. Um, I think it has room to run. We've been talking about how a lot of altcoins have ran. What do I mean by ran? I just mean they've exploded. But this has been rather just kind of grinding higher. I like the way that looks. We talked about in some of the past videos how we're creating this very nice structure here, this accumulative structure, and here we go with another higher low. Higher highs, higher lows, which means we like to stay long. To me, that is the best way to look at alts when they are in a trend, is you want to maintain higher highs and higher lows. Okay. Now, where's our target on this? It's hard for me to really, I look at altcoins a little bit conservative, meaning like I like to take profit along the way of my targets, but it's hard to say that you should really, let's say you had a position in here from lower, like it's hard for me to say that you shouldn't take profit at least at this area. Now, again, maybe you take profit more closer to this little peak here. That's just really just up to people's preference. Maybe you take some profit along the way, but I really do believe that this, like, you don't really hit any strong resistance until around this 2.7 level. But, if this follows other altcoins, I mean, you're still about 90% low. Again, I know people will disagree with me and say, you need to take profit way before that because you're playing musical chairs. Yes, you're playing musical chairs with many altcoins. I just don't believe that with this altcoin because it hasn't really run yet, right? And I do believe it has value. We can go into it. I like Near. I think it has potential to be worth a lot more than it's worth now. So let's go look at this thing in terms of some of the fundamentals here, okay? I keep talking about Near, and you may be like, why do you keep talking about this crap coin or whatever they call them? And I'm going to show you why. So Near has a $1.8 billion market cap, and it has the same fully diluted value. Effectively, almost the same. I really like that, okay, which means there's not going to be a lot of new tokens distributed to, VCs or something, and then you're going to get a big dump. At least as far as I'm aware. It looks like most of the supply is already in circulation. See? And I'm guessing that the delta, the difference between the circulating supply, or no, look, actually all of them. So the total supply is already in circulation. Sorry. So there's 1 billion tokens and a little bit more than 1 billion tokens in circulation. I'm not really sure what that means, but I'm going to take that as all of the tokens are in circulation. Okay, I like that. Now, what should this be valued? This is a little bit more difficult to analyze, to be honest. But to put it in perspective, this has a $1.8 billion market cap. And, if we look at some other alternative layer 1s or layer 2s, well, I think we can get kind of a rough idea. So Solana has a $25 billion market cap. 1.8 versus 25. Am I saying that Near is like Solana, should be worth as much as Solana? No. I'm not saying that. But I'm saying it's a reference point. Is it worth 10% of Solana? Is it worth 20? That's for people to make their mind up. But we can say, look, there is a significant difference. What about something like Cardano, which I think is one of the most useless projects that has ever been built in crypto? Well, it has a $13 billion market cap. So Near, real technology, people actually do use Near. It probably has some sort of a future, $1.8 billion market cap. Cardano, which is effectively a failed project, no one really uses it. It's been around for a while and just consistently is a disappointing project, to be honest, is at $13 billion market cap, okay? Sorry if you're a Cardano fan, I'm just going to be honest with you. Let's take a look at another layer 1. Polygon, 7.7, and actually, to be honest, I need to rephrase there. Polygon is not really a layer 1 project. I mean, it does have a layer 1. It's proof of stake chain, which is its most used chain, but it actually is it's really a layer 2 project, meaning it wants to have an ecosystem of layer 2s on top of Ethereum. That's their goal now. But it does have a layer 1. It's at 7.7 bill. Near 1.8. Avalanche 7.6 bill. Near 1.8. So you get where I'm going with this. Polkadot, and it's kind of like Cardano in my opinion. I think it's has more of a bright future than Cardano, but look at it, 6.8, near 1.8. You get where I'm going with this? I think near is undervalued. I do. Because I think near is going to be used to some capacity as a layer 2 and maybe a standalone layer 1. But they have partnered up with EigenLayer to create some sort of layer 2 that allows easier settlement, I think, but and allows liquidity to be accessed easier on top of Ethereum, something like that. I might be butchering this. I probably should look more into that. But the fact that they're partnering with EigenLayer, I think that's enough for me to say, okay, maybe this is going to be worth more than 1.8 billion here in the future. All right, but you get my methodology, right, of how I'm looking at these layer 1s. Or maybe we should be looking at some layer 2. So 1.8. Let's find a layer 2. 1.5. So I guess this is really the crux of the question. Is near going to be a layer 1 or a layer 2? Because the layer 2s are valued around 1.8. So that is important. And I guess that's something we need to research. But for now, we're going to assume that it's actually an alternative layer 1. Okay, that's what we're going to assume. And as you can see, some of these layer 1s have quite, a much larger market cap. And from a speculative trading point of view, I think that's good enough for me when it has a structure, and this is more important, like this. This looks really good on a chart. Okay, so fundamentals I think are decent. I think the chart looks a lot better, and that's good enough for me. So we're going to keep an eye on this. We like near. We think it's going higher. We'll be talking about this as we go along. All right, guys. So what else should we talk about? We want these Sunday videos to really kind of get people prepared for next week. Okay, let's look at legacy markets. We're going to start off with the S&P 500 futures contract, ES. As you can see, we had an inside week last week here, meaning price basically is finding a range, sort of like Bitcoin. Actually, as you can see, this looks very similar to Bitcoin, doesn't it? And that's what you usually see when you have these big expansions. I would say the difference between Bitcoin and ES is that, or the S&P 500 is that Bitcoin seems to need to range longer before it can expand, whereas the S&P 500 is probably not going to take as long because there is more liquidity or more people buying and selling the asset. In terms of how I'm viewing this going into next week, I'm a little bit cautious on it, just taking flight here further without some kind of pullback. But I will tell you, just straight up, I'm looking to buy any dip. So you have this volume node here. If we were to see this come back to 4,500, I'm probably looking to add along. Okay. And actually, you know what we're going to do? We're going to look at this. We're going to look at this. A little bit closer. So we're going to pull up the ES here, and I'm going to show you some more, exact levels. Pardon the wait here. I should have had this pulled up already. I did, but it was on Bitcoin, so we need to let this load for a second. And we're going to pull up some levels here. Okay, sorry about that, guys. Okay, so get this out of the way for now. Let's look at ES here. So get rid of some stuff. So as you can see, we have a weekly open here at 42.20. We have a weekly low of last week at 4,400. And we have a weekly high at 45.50 roughly, 45.40. So I guess what I would be looking for is, if this thing pulls back to 4,400, So we're going to go back to our chart, 4,400. Let's just keep this here. Actually, sorry, bear with me. Okay, so that makes sense. Basically, you want to be careful with this one if it falls, if you're long already. If it falls below this area here, it's likely to want to come test that 4,400 level. So I'm looking for any kind of long off this trend line here. So anything really, and I'm kind of winging this right now, guys. Sorry, you're getting the raw content. I mean, look, anything in here, anything from 4,400 to 44.30 near this trend line, I'm a buyer. Okay, straight up. I'm gonna remove some of these lines so you guys don't get confused. I like this. If there's some kind of reason, I don't know why the market would go here, but let's just say that something happens. This is a good buy, and we might go up higher before we would get here. Who knows? But if we get here, I think it would be very wise to look at this as a bullish setup here for continuation. Now, what about, I guess on the short side, like what would we like to short? Well, we could try to scalp a short off this top here, this previous top here. I probably would be leaning, if this were to go straight there after the open and not really spend any time down here, I'm going to be looking to short. But, and that level, by the way, is roughly like 45.50. But if it were to pull back, to 44.80, and let's just see what we have here. So the weekly POC is 45.20. So weekly VWAP is 44, so really 4,500. That's really the key level we need to highlight here, 4,500. This is an area we should look to long. Anything around 4,500, 4,490, you don't have to be exact. We'll just put this at 4,500. That's probably going to be a level of support. It's probably not going to want to break below that. So we would look to long here, right? But if we were to break below this level and fail to get back over, that's when we start to probably target somewhere around here. But if it were to come here, you get some constructive price action and you see it go up, that's how I think you could break this level. But if it were to go here first, I'm looking to short. Does that make any sense? For me to short this level, like I'm leaning long is what I'm trying to say. I don't want to actually short this market. I would much rather long it. So if it gives us a pullback, I'm looking to long here. If it doesn't, and then it goes straight here, that might be where I would want to short, because I do believe that it probably needs to, in my opinion, really kind of digest some of this move before breaking this level. Does that make any sense? Okay, so that's the plan for the ES. I mean, and we're looking at this again. This is like the weekly plan. We'll go into more granular data or granular time frame, more low time frame rather, throughout the week in the Discord and stuff. But that's how we're looking at it for this week coming up. And I think that's really all I want to cover, guys. Again, this is just kind of a rough draft video. We want to get in the habit of creating these videos on Sunday. And that's all we got for today, guys. Until next time, happy hunting, friends.
Hey, thanks for watching. Be sure to like and subscribe to our channel if you'd like more updates like this, and let us know in the comments, what do you think about today's video and Defiancy update and insight? Also, make sure that you join our Discord, our free community chat, where we discuss things like this, what's going on in real time. Typically, our Discord community is the first to know what's happening, and we would love to see you there. Check the link in the description. And until then, we'll see you in the next Defiancy Insight video. Bye for now.